Okay, so brief intro to UMLRI and the Northstar campus. You can see a couple of pictures here in the lower right. We are located, as I mentioned, right outside the back gate of Hanscom Air Force Base in the Lincoln North building. Picture on the inside, we just completed construction late last year, so we are slowly beginning to move in as COVID permits. But the UMass Lowell Research Institute itself is supported by the UMass Lowell Applied Research Corporation, which itself is the 501c3 entity. But what this does, we are a separate entity from the university, but yet very closely affiliated with not only UMass Lowell, but the entire UMass system. The idea is we are an outward-facing Department of Defense and aerospace and defense community business entity, serving as your threshold from the commercialized dual-use technology space into Department of Defense SBIR types of contracts and ecosystem. But it's a place where we really work hard within the ecosystem to create community, spark innovation, and bottom line stimulate business growth for your company. We have large defense primes, small defense primes in this space now. And we serve a lot of customers in the Department of Defense, the Naval Research and the SBIR community there, Air Force SBIR, as well as Army as well. A lot of meeting space, hot desks, training space, program support, and a lot of technology events like this that we have planned in the space as soon as we can get back in there at even half to full capacity. But bottom line, we provide a lot of the technical and business assistance wraparound services to get your business entered into an SBIR pipeline. And what our two panelists are going to talk about today, some things that you may or may not have already begun to think about. You know, what if that next contract happens, or what if that next win comes? Then what are some things to think about? Cost accounting is a big one. And Ryan, I believe I'll turn it over to you.
Awesome. Thanks, Matt. Yeah, I mean, that's right, which is why we came up with the title of Barriers to Entry, right? That's really why we called it that, because it is a barrier to entry, right? The U.S. government, whether you're providing a good or a service through a prime contractor, or you're a subcontractor to a prime, or directly to the Department of Defense, there are some basic kind of standards you need to satisfy in order to be able to perform underneath those contracts. And really what I think we'd like to do here today, understanding a bit of the audience that we've got on hand, is really explain, well, what is that, barrier to entry? It can sound like an enormous thing, right? It's a barrier to entry. How do I get through such a thing? But like the accounting system in particular is one that you do need to be able to satisfy under certain contract types. And we want to explain there's a lot of ways to do that. You shouldn't be scared off by the term barrier to entry, but you should understand what that barrier to entry is. And that's really the objective of today, I think, is to say, all right, what is the government's expectation of my accounting system? When does it have a vested interest in it? And what are some, best practice ways to consider that based on where my business strategy is, right? My first government contract is much different than my 100th government contract. So that's really what we hope to cover here today. This is just one of my favorite quotes. If you've ever heard me speak before, I use it every time. I really do. I know I go back to the well on it. I don't know that many in the audience, judging by the companies there, but I love this quote. The universe never did make sense. I suspect it was built on government contract. Anybody who's familiar with Robert A. Heinlein, he's a dean of science fiction, right? This is a guy who writes about Jar Jar Binks in Star Wars. And he took time out of his very busy novels to comment on how unusual government contracting is. And so I think I like to share that at the front end of government contract compliance conversations, because it might not always make sense. If you do take the time to understand the government's position on things, there is always, generally a sound logic and you can understand it. But coming into this from a commercial mindset, if you don't have a whole lot of understanding of the way the government operates, it's a really important thing to have an appreciation for up front, which is I need to understand the government's rules. you can't come into it with well, I think I know how business, what a good commercial minded business looks like. It's okay, how does the government look at me? And that's why I open with that, because I think it does two things. One, helps us have an appreciation for the government's perspective on what their expectations is, however minimum or however min or max that expectation is. But also, really, it's just a funny quote that somebody of this, caliber, who was really associated with writing science fiction novels, commented that it is. It's just a different world, The government doesn't do business. The government does government. We need to understand that up front. So then you translate that to, almost in contrast, a quote from the FAR, and then we're going to get into the accounting system specifically. But if you boil most of the FAR down, right, the Federal Acquisition Regulation, there's 52 parts, 1,000 pages, and 10,000 interpretations. But in my mind, it boils down to this, right? Contracting officers, the warranted officials who buy goods and services on behalf of the government, shall purchase supplies and services from responsible sources at fair and reasonable prices. That's what they're attempting to do. There's a lot of different ways that can happen through a lot of different contract types, a lot of different arrangements that can be had within that very simple phrase. And so when we look at accounting systems, right, that's one of the barriers to entry. There are multiple, right? When you think about what the government's trying to do through this single sentence, you boil the FAR down to one, we have to be able to overcome a couple of things, right? Or not overcome, we need to just be able to satisfy the government's expectation that we're a responsible contractor, that we're giving them a fair and reasonable price, that our procurement standards, if we have a supply chain that we intend to use underneath a federal vehicle, that they too can meet present responsibility criteria, fair and reasonable pricing, invoicing. All these things are things. And one important thing that's going to come to light real fast is it depends. How many of these barriers to entry or how many of these compliance considerations you need to have up front really depends on the way in which you intend to operate with the U.S. government. So today's focus is really the accounting system. The question, the biggest question is, well, why are all these protections here? The simple answer is, of course, taxpayer dollars, right? The government has got a fiduciary duty to use taxpayer dollars responsibly. And when you translate that to the accounting system, well, why is the accounting system such a critical piece? Why does the government have a vested interest in my accounting system? Well, it's a source of record for audit in many contract types, not all, as we'll see in a moment. It's used to invoice cost. At that point in time, the government is a partner in our books and records, right? Almost like taxes, right? If you think about your taxes, the government has a vested interest in your books and records too. Even if you're not invoicing cost, we need to leverage that to be able to do a compliant tax return. Same thing occurs in a federal government contract, depending on the contract type. We're using that. The government has got a very, very vested interest, and they're a partner in our books. And that can be, just that light bulb, if you haven't done a lot of work with the U.S. government, helps bring an understanding to why they want us to demonstrate to them through their audit function that we've got an accounting system that can meet really the needs of the contract type they're considering with us. So that's really the reason why the accounting system is so important. So the natural question is, okay, great. I recognize the government may have a vested interest in my accounting system, but when? Like when contract types? This is the FAR. We translated to a simpler slide on the next one, but this is the regulation from FAR Part 16 that says, before agreeing on a contract type other than firm fixed price, the one time you don't need to demonstrate that you have an acceptable accounting system to the government is if you're in a firm fixed price contract. Generally speaking, a firm fixed price contract has no accounting system requirements attached to it. So it really means that cost reimbursement and time and material contracts are where the government has a vested interest and is a partner in our books, if you will. There's really three contract types in its simplest sense: fixed price, time and material, and cost reimbursement. If you're intending or already have contracts that are of the cost reimbursement or time and material contract, then there's a requirement that the contracting officer or a prime contractor on their behalf, if you're a subcontractor, needs to satisfy. We need to demonstrate that we have an adequate accounting system. Now, it's important to asterisk there at the bottom. While there is no requirement that firm fixed price contractors have, have a compliant or an adequate, I'll say, accounting system, there's still great value to how you use your accounting system in the government's eyes. Because very often in the fixed price environment, whether it be the first contract or a follow-on contract, you're going to need to provide basis of estimates for your proposal. And the best basis of estimate is historical cost. So if your accounting system can help you do that, you're in a much better negotiating position. You're going to put yourself in a better position to negotiate a higher, optimized, fair and reasonable price than not having good cost accounting. So important to draw the line. Cost reimbursement and time and material, they're prerequisites. Government cannot satisfy its procurement file without giving you an adequacy determination on your accounting system. Fixed price environment, not a requirement, but is of significant advantage to you if you're negotiating any contracts based on cost. So we said in this slide here, well, we need to satisfy an adequate accounting system. Well, what is that? How difficult is it to satisfy, an adequate accounting system? Honestly, of all the government contract compliance audits, the adequacy of an accounting system one is one of the easier to overcome. There's more than one way to be compliant here. And the way the government does it is they perform a pre-award SF 1408 survey, right? And that lists out whether or not the design of our accounting system can simply demonstrate that we can do project accounting, right? Each of these bullets here is saying the same thing. Can we account for cost at the contract level? Which makes, great sense. If the government's going to issue me a cost reimbursement contract where I intend to invoice them for my cost incurred, well, my accounting system is going to need to be able to segregate my direct cost from my indirect cost. One direct cost from another direct cost. We need to be able to accumulate cost at the contract level. And that's really what the pre-award accounting system audit is focused on. It generally takes DCA about a day to perform this. It's not, if depending on your level of contracting profile and experience with the government, its audit agency, not all audits are created equal. This one here is not that difficult a barrier to entry to overcome if you can satisfy the project accounting piece. Project accounting means segregating direct and indirect costs. Within your direct cost, you can identify to different contracts to which it belongs. A timekeeping system where you're accumulating cost at a project level. An indirect cost rate methodology, right? That doesn't need to be complicated, but there needs to be some way that we can demonstrate to the government once we've segregated our direct and indirect costs. Well, what's my overhead rate? How's the government going to participate in that? Because we certainly expect compliantly, of course, that they will participate in the overhead of our business. That's one of the benefits of cost reimbursement contracting, is that we get our costs reimbursed. That includes direct and an allocable or equitable portion of our indirect costs. And then lastly, that we can demonstrate that we can exclude unallowable costs. Unallowable costs are costs the government by law and regulation will not participate in. The old saying is if it's fun, it's unallowable, right? So alcohol, entertainment, there are a variety of costs. They're all defined in Federal Acquisition Part 31, FAR Part 31. It's its own course, but at the point of adequacy, you just need to demonstrate that you've got a process in place to be able to exclude those costs. None of these things are that difficult if you put some thought up front as to how you're going to demonstrate that. So what can I expect during a DCAA pre-award accounting system audit? Of course, they're going to evaluate what these criteria are, right? They're going to say, all right, can you please show me what they'll ordinarily do is they'll send a request list out asking for your policies and procedures. They'll then schedule some time for walkthroughs of the key areas in your accounting system. That would include timekeeping, that would include invoicing, it would include how you carve out unallowable costs. And what is your indirect cost rate structure? Those walkthroughs, depending on how large or small your organization is and how many transactions you intend to run through your accounting software, they may be 30 minutes on timekeeping, might just be 30 minutes on invoicing. It really depends on the size of your business. As I said earlier, it's typically performed in a day. There are two, it's important to also make the distinction that DCAA, the government's audit agency, has a pre-award accounting system audit, which only looks at the design. That's all it's looking at. Can you account for costs at the project level? If you can satisfy that, then you are going to get an adequacy letter from the government. And that's really, you're over the barrier to entry. At that point, you're good to go. You've got your ticket to the game. You can now perform underneath cost reimbursement and time and material contracts. You will use that in response to solicitations from prime contractors and the government when they're soliciting cost reimbursement and time and material contracts. Again, not fixed price, but for those two contract types, you really need that letter to be able to satisfy that requirement. There is a separate audit for those who might be on the larger side of government contracts, may have had a post-award accounting system audit. That's not evaluating the design of the accounting system specifically. It's evaluating how you used your accounting system. It's doing transactional reviews. It's going through and saying, if you invoiced me 100 times in the year, I'm going to select 20 of those invoices to make sure that the labor hours tie to timesheets, that your suppliers tie to purchase orders and compliant subcontracts, indirect rates were properly applied. So that's a post-award accounting system audit. That one there is not the one that is the barrier to entry. The barrier to entry is this first pre-award accounting system design. So what are some best practices in being able to demonstrate that, right? I mean, for me, again, I think a lot of our audience might be, small businesses, depending on your size, but under any size or variety, you want to keep it simple, right? It's got to be something that's practical. And the place where that usually starts is your chart of accounts, right? You have to have direct and indirect. You got to make that distinction in there, but how many accounts for direct do you need? How many accounts do you need for indirect? Another good example of keeping it simple, a practical indirect cost rate structure. It is your indirect cost rate structure. Every contractor is entitled to design its cost accounting practices any way that are equitable within the regulation. And there is certainly more than one way to do that. You can have one overhead rate. You can have multiple overhead rates. You could have a fringe rate, an overhead rate, a G&A rate. There's a lot of different ways to do it, but it's important that when you enter this space, you take some judicious time to determine what's the right rate structure for you. You want to keep it simple, but the government participates by law in what's known as total cost absorption. It means all costs in our business will wind up being absorbed by a contract. Some of those costs will be absorbed by a government contract. And depending on what rate structure you choose, the cost that gets charged to the government underneath some scenarios may be higher than another. You want to consider that up front, right? There is more than one way to be compliant, and some optimize cost recovery. Some might disadvantage cost recovery. There are more than one way to be compliant, and considering that indirect cost rate structure is one of the most important pieces to any government contractor underneath any contract type of cost reimbursement and time and material specifically. Training goes without saying, right? You can't really be in the game of U.S. government contracts, particularly cost type contracting, without some training to the team and staff, timekeeping being one of the core ones that would affect all employees. And then the accounting staff, right? The accounting staff, if they're not familiar with the universe of cost reimbursement and time and material invoicing, it's different, right? It's a much different type of an invoice that goes out the door, and it just takes some fostering, some care and feeding. Government accounting policies and procedures, and this one's big too. I mean, consider the future state of the business. Not every business grows at the same rate. You may be in the business of having one cost reimbursement contract for 1 year and then no longer rely on cost reimbursement contracts, or you may be quickly growing in the services space, right? If you're a research institute, I would expect that you're going to have a lot of cost reimbursement R&D type funding arrangements. So, consider the future state of the business when you're trying to figure out, how do I want to set my accounting system up for participating underneath government contracts? The level of automation versus manual. You can do a compliant accounting system. I think we said it before, in a shoebox. You can do it on a chisel and stone. You can satisfy project accounting in so many different ways. It's what level of effort do you want to put on your accounting staff or management to be able to accommodate it? So really considering what's the optimal level of automation versus manual is key, right? You could go out and buy an ERP system that solves a lot of the automation for you, or you can go with, you know, a less automated system. And that's a balance, right? And I think contractors, if you look at their growth cycles, tend to graduate from one particular manual-based approach to something more sophisticated in their ERP and accounting system needs. And taking a look at the future state of your business, marrying that up with, you know, what accounting processes make sense for you is critical. It really just really is. It's so important to not just satisfying the government requirements on your accounting system, but accounting becomes, when you're a government contractor, cost is the lifeblood of the organization. Having an understanding of it and as much visibility into it as you can without a lot of manual processes winds up being critically important. Which is what that bullet, consider management reporting interests in tandem with compliance, right? Certainly we have to satisfy compliance, but the government isn't the only interest in our books. So we've got to be able to balance, hey, what management reporting do I want out of my accounting system? And, you know, how does that marry up with the government contract compliance? So that's really the key here is, if we look at what the requirements are, right, this is it. There's a lot of different ways to do that. There's a lot of different solutions, whether it be an automated solution by way of software or manual, to be able to satisfy that. So that's really our time on walking through the accounting system. I think we wanted to bake plenty of time on the back end of this for Q&A, and I think we may have a couple of charts that Donna may speak to as well. But that's really the accounting system in a nutshell. Is cost reimbursement and time and material contracts. Got to have it, right? It's just, that's your barrier to entry. It absolutely can be satisfied. Of all the DCA audits, it's one that you can satisfy quite readily if you're properly prepared for it. So with that, I think I'll open it to Q&A.
Okay, Donna, I just want to thank you very much, Ryan. A lot of very good information there. I actually learned a lot from that presentation, so thank you very much. Donna, did you want to go into questions right now? And then we'll come into your slides in a moment.
Sure.
Okay. Ryan, can we just use QuickBooks?
Yes, if it can satisfy our requirements. So QuickBooks is a very common solution for particularly small business contractors. QuickBooks has done a lot in the interest of government contracting. In fact, they recognize that it needs some bolt-ons. It's not always the most, it depends on the size of your business, but yes, if you can use QuickBooks, and the answer is you usually can if you tailor it the right way, to accumulate your cost by project, you can. Is it a one-stop fix? It depends, right? Like timekeeping is one thing that you may do outside QuickBooks that plugs into QuickBooks. Or QuickBooks has got into it where you might want some connectivity. So the answer is yes, QuickBooks can be a compliant solution, but you need to set up your chart of accounts and an indirect rate structure the right way within QuickBooks to be able to compliantly, invoice your customer for the cost type work.
Thank you. You've mentioned indirect a few times here. Can you talk about the differences between, say, fringe and indirect?
Yeah, so as I said a bit earlier, it all starts with what's a direct cost and what's an indirect cost. Every single expense in a business, there isn't a single expense that won't be categorized as one or the other. So if you were to look at last year's books or a budget for that matter, and forecast all expenses, they're all going to be direct or they're all going to be indirect. Once you get to that indirect bucket, there is a number of different terms out there for what we might call indirect. Think of the indirect as a group of costs that might fall into multiple indirect categories. In the simplest sense, you may have one indirect rate, which includes fringe, and fringe would be things like paid time off, the medical expense benefits, 401k match, things like that. Those are generally considered fringe expenses. So let's use an example. If you had $1 million of indirect expenses in your past year, you might look at your spend profile, and 200,000 may be something you could categorize as fringe. And then you've got $800,000 left. You may look at that and say, all right, well, 500,000 of that relates to overhead, which is going to be costs that more support my direct labor force. The remainder might be what you often hear as G&A expenses, the cost of executive leadership, the cost of the HR group. And every single company has an opportunity in that example to define that $1 million, however, is equitable, right? That's what FAR is really based on, is an equitable cost allocation method. So when you ask about, can we have a fringe rate? You can have a fringe rate, but you're not required to. In this very specific example, it may be equitable to use one indirect rate of an entire $1 million allocated over direct labor, and then that's how you allocate your indirect costs. You may decide, I want to take that $1 million and have a fringe rate and have an overhead rate and have a G&A rate. It really is so company specific, and it's critical that you kind of think through that up front. You want to be as simple as you can, but if you run that calculation across your government contracting portfolio, no matter what, you're going to get a different answer with each rate structure. And so you want to kind of run that up front before you select one.
Okay, excellent. Ryan, we've got a few, several now from the audience. Question number one, for those of us new to this space, government contracting, it seems that the government differentiates between cost and price. Can you walk me through what that means in a government contracting officer's mind, or the FAR's?
Wow.
The government contracting officer's mind.
Yeah. So I'll speak to it through the regulation, which is who the contracting officer is acting on behalf of, right? They have to act within their warranted authority through the regulation. And I'll go back to this quote back here. This here, fair and reasonable prices, is defined differently depending on how the government is buying, right? So if they are buying cost reimbursement, well, our cost is our price, right? In a cost reimbursement contract, our cost is our price. The only difference is whatever negotiated fee we put. So if it was a cost plus fixed fee contract, our price is our cost plus the 5% or 7%. So cost reimbursement, for the most part, cost equals price. If you look at a time and material or fixed price contract, on the time and material portion, the material portion cost is price, just is, right? Because you're going to pass through your material. If you look at the T, which is the labor portion, the labor rate, the majority of your price in a time and material contract and a fixed price contract, in those scenarios, the key question is the government or your prime contractor competitively awarding the contract? If the government or the prime is competitively awarding the contract, cost is generally not a consideration. Adequate price competition protects the government's price point. So as an example, if a solicitation comes out from a prime in a fixed price contract, I offer $5 million, somebody else offers $4 million, we're technically acceptable of fairly equal comparability. Well, the government is required to go buy the $4 million one. They don't need to look at cost because they know they're getting a fair and reasonable price by way of competition. When cost translates to price is when competition is removed. If competition is removed, the government doesn't really have a way to protect itself other than to look at your cost. And they do that in an equation, which is allowable cost plus reasonable profit. So cost plus reasonable profit in a sole source environment would be where you're estimating your cost on a forward-looking basis, right? If you take a look at what you think it's going to cost you to perform that contract, you'd forecast your direct cost, you'd forecast your overhead rate, and you'd apply that, and you'd propose that to your government or prime contractor customer. And at that point, your cost becomes your basis for price, right? I think that this is going to cost me $4 million to do, and I think I'm entitled to 15% profit on that. And the government in that environment will audit each of your estimates, the $4 million, and they'll separately negotiate profit to get to a full, fair and reasonable price. So how does a contracting officer evaluate cost versus price? It absolutely depends on what and how they're buying it from you. If they're competing it, then they really is not any reason traditionally. They do have audit rights to request for it during negotiation, but that's only if adequate price competition can't be satisfied. So in its simplest sense, if you're being competed, then your cost underneath a fixed price and time and material contract, generally cost does not equal price. If it's sole source, particularly over $2 million, that's where the truthful cost and pricing law comes in. But if you're being sole source, fixed price T&M, or any version of cost reimbursement, cost equals price.
Excellent, thank you. On the cost recovery, question number 2, can you talk more about cost recovery optimization? For a small business, might a single overhead or indirect pool be preferable to multiple pools? In other words, fringes, taxes, G&A, overhead, and when might it not?
So if you were to do a analysis of your direct costs, and it depends, you could doing it on a forecasted basis or last year's experience, if you think that's representative of the future, is a common place to start. If you look at last year's experience or a forecasted budget that's reliable and calculate, as an example, one overhead rate, and say that overhead rate comes out to 100%, and you allocate that to your government contract, which is a cost reimbursement contract, well, that number is going to give you something. It may say that I'm going to allocate to the government, $15,000 in the next year. If you were to split that 100% overhead rate up into a fringe rate of 30% and an overhead rate of, let's say, 60%, well, that number is no longer going to be 15,000. It's going to be 14,000 or it's going to be 20,000. So long as both of the options of the indirect cost rate that you're looking at are compliant, and generally speaking, splitting fringe from an indirect pool is a very common thing to do. Well, you would likely want to choose the one that optimizes cost recovery, right? If I can compliantly allocate more cost to my government contract, I'm going to do so. It's in my best interest, and it's still equitable and compliant to do so. So when we're talking about, is it appropriate to have a free, when the question I think is asking about, well, what's the right rate structure for optimizing cost recovery, really depends on what your forecasted contracting portfolio is going to be, which will be influenced by contract type and really the allocation base you choose, right? An overhead rate might be allocated over direct labor, or you might have an overhead rate and a fringe rate with different allocation bases. So that will influence which one is more optimal to recover cost. And you always start with, what are my universe of compliant options, right? Because not every rate structure is compliant to a circumstance. You want to, for a small business in particular, there's probably only 1 to 3 compliant options you'd even consider. You'd look at those, you'd run a quick cost recovery model, say, well, what do I think this is going to be? Let me put my best Nostradamus guess to this, and then whatever comes out the other side is going to inform your decision, and then you're going to sign up for that rate structure.
Excellent, thank you. Next category, timekeeping. Best practices for managing timekeeping in a startup to make it less onerous. Or is there a low-cost way to do this?
I mean, there's a lot. There really are. I mean, you could do timekeeping manually. I'll say that if you're in the cost reimbursement or time and material world, at minimum, the baseline minimum you cannot avoid, you have to do daily, and it has to be all of your direct labor force. Those are the 2 things. You can stack requirements above and beyond that, but you will not be able to pass an audit or satisfy your invoicing requirements compliantly unless your direct labor force is doing daily timekeeping, which can happen in a timesheet, which is obviously manual, invites its own inherent risks that come with manual timekeeping, but that could satisfy the requirement, may or may not be onerous, and onerous is beauty's in the eye of the beholder, might not be onerous to the individual filling the timesheet out, but it may be onerous to the accounting team that's looking at 14 different versions of an Excel spreadsheet. That puts your invoicing at risk.
A good point.
Right?
So I think that's a really important point, Ryan, because so many customers are thinking about, or so many government contractors are thinking about that as an onerous process. So exactly right. What's onerous? Think about your workforce. Are they mobile? Are they in the office? Are they not? Do they have access to the internet? Do they not? Should they be doing things on paper? It's onerous to somebody, and the question is who. It could be your end users entering their actual time, or it could be the folks back at the home office who are rekeying information into some other system to be able to keep track of all that. And then when you have an auditor on board, you have to have all those paper timesheets or whatever it is that you are looking at to show them what you've been able to accumulate with those timesheets. So I love your question of onerous there and thinking about how it applies.
Yeah, and there's the element of what makes your life easier come audit time? Again, thinking about what the future state of your business is. If you're doing cost reimbursement and contracting, at some point you can expect an audit. May not be, depends on how much cost reimbursement contracting you do. It may not be, a very deep audit. It really depends on your business profile. But having an automated timekeeping system, it really isn't that difficult to set up, right? Versus having manual timekeeping. I understand the attraction to manual timekeeping because everybody has Excel on their workbook, right? It can be used. It's really not that difficult to just move to something automated. It's not onerous by way of employees because it forces consistency, and it really does create a much more. The word timekeeping, unfortunately, I think invites, this is difficult to do. I would argue most times that manual timekeeping becomes a bigger problem than it's worth, in my experience with clients. But can you satisfy that? Yes, you can. You absolutely can. I don't want to say what is, you can satisfy compliance with it, but it's kind of a Band-Aid if you expect to grow in this space.
Okay, a couple more questions on the timekeeping, the next one here, and it really is bottom line, what's some primary red flags that can be raised? Question is, how precise does timekeeping need to be in order to be considered compliant? Would identical bi-weekly timesheets, for example, that split hours between 2 to 3 projects raise red flags? What are some of the common red flags that you see of like, oh no, that's just not going to work?
Yeah, I would. Well, I mean, the most recent one was when I saw somebody record 24 hours to a project. It's like, well, that individual probably didn't work a 24-hour workday, and if they did, they're underpaid for sure. There's a number, right? I think that's one of them. Consistency in how direct and indirect costs are charged, right, is a red flag. If you look at your employee labor categories and you've got a couple of program managers, and you simply look and see that one program manager is charging all their time direct and another program manager is charging all their time to overhead, that's a red flag. If you're talking about an individual, a red flag associated with an individual's labor charging practices, two things that stand out are, one, yes, identical timesheets over and over. It's probably a little hard for an auditor to digest that you really have such a routine project that's the case. It doesn't mean that it couldn't be true, right? At the end of the day, an employee's responsibility is to record their time, usually to the quarter hour, as to what they're doing and describe what they're doing within the statement of work on a direct timesheet, right? So if your level of effort is scheduled to be the same, then identical timesheets could be the same, right? It wouldn't necessarily be unusual for somebody to work 40 hours against the same project for 3 months, if that's what the statement of work requires. That would be a red flag. I think another red flag that, labor adjustments, right? Anytime a timesheet has labor adjustments occurring, whether it be from the employee or from a supervisor, if you've got a lot of labor adjustments occurring, it kind of suggests that there's a discipline issue in how time is initially being recorded. And auditors look for labor adjustments specifically. They want to see how routine they're occurring, how disciplined are we on the front end. So the volume of labor adjustments is definitely a red flag. Of course, not having the 1/1 approvals, right? If the employee doesn't approve their own timesheet and a supervisor approve on top of it, that's going to be a red flag if there's inconsistent approval processes associated with it. I don't know, Donna, you probably have hundreds of examples yourself.
I think those are a lot of the common ones. Another one is, we're filling in timesheets based on what we thought we were going to do. That's not what the government wants you to do. They want you to fill in what you actually did. So a lot of times we'll hear people say, well, can I just fill it in based on predictive, analytics, or maybe can I just, the engineers love that one, or can I just fill it in based on the work I think I'm going to do based on what I bid? It's a big no-no. You've got to actually have that daily entry. It's got to be the actual user that puts that time in, or an audit trail saying who put it in on their behalf. Just think about if you had somebody from the government, once somebody said, whatever you do, you want to make sure that your mother would approve. And if it was on the front page of the paper, you'd approve. So think of a government contracting auditor sitting over your shoulder. And if it doesn't feel right, it's probably not right. So there's kind of that gut check that you can think about too.
Yeah, and I think two thoughts along those lines is one, you cannot record your time in advance of being worked, right? It needs to be historical. You can't put it in advance. An auditor will look for that. That's a red flag. They'll look for the if you recorded time ahead of time, I mean, that will be an internal control deficiency. And the other one, that's a red flag, is looking at budget, right? If you're over budget, there is an inherent pressure that may or may not be pushed on you from above, or you might just feel it. If you're over budget, yet you're still working on a contract, there's it's just inherent budget pressure to record that time to overhead, right? That's another risk, is looking at your direct cost budgets. And if some of them are over budget, that there's risk that somebody might feel influenced by their own influence, or maybe a supervisor, to start recording that time to overhead so that the budget doesn't, they don't look more over budget. So you have to record your time without consideration for budgetary pressure. Your time is what your time is. And candidly, it's not that hard to satisfy government timekeeping requirements. It's not. Just record your time where it belongs. But if you're looking for red flags where there's a lack of discipline happening, right? Because we're answering a question with a lot of examples of what goes wrong, but all of those examples are easy to mitigate on the front end. If you just train an employee to say, hey, you worked 8 hours today. Honestly, I mean, you can leave it to the project manager to say that, oh man, you took too much time to do something, but that's not what the government's interest is. Put your time to the quarter hour where you worked it. That's it. And then you're going to be fine.
And a lot of the things we talked about here are things that automation can help, right? So you, to the extent possible, especially in this remote workforce day, that we're in, you don't want to have to eyeball something and ask questions every time there's something that looks like it might not be correct. That's the onerous part of it. When you can get a system or a tool that will capture that information accurately, it will enforce those business rules that the DCA are going to enforce anyway. It just keeps you from having to unravel things when they get to the invoice stage, or when they get to the point that you're posting that labor to your financials. So you can really help put some discipline in place, both from a process and training point of view, like Ryan said, as well as from an automation and system point of view, if you choose to do so. It makes it much more cost effective.
Yeah, in a services world, right? And I'm assuming a lot of what we have perhaps are R&D type functions or companies interested in that space. It's the number one cost you're likely to invoice for. So, shorting it on the timekeeping is the one place where I think you'd want the most upfront thought on to make it as simple as possible long term.
Okay, just a couple of more here. Next question. I didn't hear labor hours as a type of contract. Is this a type of government contract? And if so, how does it differ from others?
Yeah, no, awesome question. So labor hour contracts are their own contract defined in FAR Part 16 for geeks like me who like to trace it right back to the regulation. So FAR Part 16 does have a labor hour contract definition. It does not require an adequate accounting system. It does require, pursuant to FAR Part 16, that you can demonstrate that you collect hours, right? The contracting officer is, by regulation, required to satisfy themselves that the contract type they're awarding to you, that you can compliantly satisfy the invoicing requirements of it. So a labor hour contract does need to be able to, a labor hour contractor, if that's the only contract type they have, does need to satisfy the government and CO's interest that they can collect and invoice hours compliantly. But they will not be held to the standard of the SF 1408 that we walked through before, with all the policies and procedures, the indirect cost rate structure, right? All that stuff wouldn't come into audit purview.
Okay.
It is an easy one to get confused, right? I mean, time and material contracts and labor hour contracts, they behave pretty similar to one another, especially if you don't have a lot of material in a time and material contract. But the FAR does segregate their compliance interests on them a little bit.
Okay, thank you very much. I thought we had an SBIR type of contracting question, but it looks like that one was answered. So
Matt, if I could, we do have one more question that typically we get from younger businesses coming in. So the question is, how can you request, or how do you obtain that pre-award DCA audit? If you're just starting out, what do you do?
Yeah, I mean, I would certainly ask your ACO, if you have one, or your procurement contracting officer, if they're the ones soliciting from you, because at that point you're aligned in interest, right? if it's your procurement contracting officer and they've got a solicitation out there that you're bidding on, they have to put in their procurement file that you have an adequate accounting system. So you should ask them and say, hey, listen, I'm ready for audit. I need you to do it. So you would go to whatever cognizant ACO, PCO, and or DCA, depending on your relationship. These things can vary, but you should ask the government for it. If they won't perform it, and unfortunately, sometimes it's difficult to get DCAA to perform a pre-award accounting system audit on a small business without having the ACO or PCO really demand it, right? Because it's important to them. DCA is spread thin with resources. They've got a lot of, their audit backlog is typically pretty planned to begin with. It can be quite difficult to get them to pivot to do an accounting system audit. And candidly, it doesn't really, there's no question costs associated with it, right? And oftentimes a lot of DCA's audit scopes are focused on question costs, right? That's one of the measures that they have to report in their report to Congress. So for a lot of reasons, you can't always get it. So simply put, you should ask for it. If you can't get it, they will allow small businesses, in my experience, in almost all circumstances, to allow an independent CPA firm to come through and do an SF 1408, just like DCA would, and issue a letter that says, hey, they're ready for this. Contracting officers generally accept that. We've done that for, probably 50 small businesses, and it has never not been accepted by a contracting officer. So if you can't get, you do want to get DCA or the government to do it. Why? Number one, it's free. You got to pay, somebody like us. It's not terribly expensive to do it, but you'd rather get the government to do it for you. But if you can't, because it is difficult to get DCA resources engaged on such a thing sometimes, then you can go to an independent CPA firm, and if they've got the specialization in it, they can do that for you.
Excellent, great question. Donna, I think we've got a couple of slides on benchmarking your organization, and I'll throw it over to you now.
Matt and Ryan, if you don't mind just showing those screens. So the background here for our folks on the webinar is that Uninet does, with the help of a large accounting firm out there in the universe, we do a report called the Gauge Report, and GAUGE. This is available for download, so we're happy to share this data with you. This is just a couple of subsets of the data, but they're questions that I often get from small government contractors. And so what we do with this report is every year we collect data from government contractors all over the country to be, fully transparent. They do not need to be our customers. They are government contractors out in the industry, and they're in various different size ranges. And so we ask them all kinds of great questions like, what do you care about right now? So here's a benchmark around that. These are the things that government contractors care about right now. This is what's on their mind, keeping them awake at night. We ask them about timekeeping. We ask them about indirect rates. We ask them about their billing practices, their win rate. And the types of data that are in this benchmarking report really help you as an organization compare yourself to other government contractors that are in the same revenue bands that you're in. And so, for example, if you're wondering, well, gee, if my win rate is 20%, is that comparable to other government contractors my size? Then this is a great report for you to be able to analyze that. I always tell my team, this is the type of data that's really a gold mine in terms of competitive benchmarking. Government contractors often are prime sub-relationships, there's joint ventures, we work together, there's all kinds of partnerships that happen in the government contracting world, but there's also all types of competition happening in the government contracting world. So they won't share something like, here's my indirect rate, here's my overhead rate, here's my wrap rate, which is the combination of all three of those put together, overhead, G&A, and fringe. And so if you're looking for that type of data, if you don't mind, Ryan, just bounce to the next slide. I thought I would just put this up for indirect rates and just to kind of, underscore some of the content that Ryan talked about. We do have companies that just use one rate. We have others that use separate rates, fringe, overhead, materials and subcontracting sometimes. Sometimes there is a facility fee. Sometimes there is a G&A rate, and they break those rates out separately. So there's all different ways you can structure your indirect rates, and folks like Ryan can help you figure out the best way to do that for the contracts that you're on. But this gives you an idea with the revenue bands over there on the right, $0 to $10 million, 10 to 25 million is the light blue, 25 to 50 million is the gray, And then companies that were over 50 million at the time of the survey are showing up in orange. And this just gives you an idea of what those rates are. So if you're thinking about, hey, I want to compare my fringe rate to other fringe rates, this might be some interesting data for you to take a look at. And one other thing I would add, Ryan talked about the different contracts that are contractually required to separate your indirect costs from your direct costs. That is oftentimes the sort of the pivot point that we'll see customers starting to break out their data at that level of detail. But I'll also find, a lot of what we talk about in government contracting is all about compliance. The other side, though, of that coin is just running a good business. So even on your fixed price contracts, if you're charging the government $10,000 a month for a given contractual agreement, and that's what you've agreed on, and you're not worried about cost accounting standards because you're charging them $10,000, you get $10,000. Well, what if your costs are $11,000 a month? You're not actually making any money on that contract. And so a lot of times it's just a good business practice to be looking at your indirect rates, to be thinking about how much does it cost me as a company to manage my people, to provide them laptops, to provide them lights and electricity and a space to do their work, and all the things that go into these different rate structures that we talk about as these indirect costs. And so even on fixed price contracts, it can be incredibly insightful to be able to say, what's my real net profit on this project? And the only way you're really able to do that is if you take your direct costs, you take your indirect costs, and I'll just put that small I, right? Any of the way that you label this, and you see what your total costs are relative to the revenue that you're bringing in from the government, and are you making any money or not? So that's kind of my thought around indirect.
It's the only compliance I've ever come into, government contract cost accounting compliance, the only one that I can tie to your bottom line every time, right? You can tie it right to your bottom line. And that's why the compliance element of government contracting is so unique. Sarbanes-Oxley for publicly traded companies, they get it wrong. Is there a financial consequence? Not really, right? You get the cost accounting wrong, whether it's compliant or not. If you use government contract compliance as your baseline for cost accounting, it is it's better for management reporting as well. It absolutely improves margin visibility on the commercial work as well, without question, 100% of the time.
And we find as companies evolve as government contractors, they'll look at those rate structures every now and then. I think one of the data points from the gauge that I'm looking at here is 40% of the companies that we talk to have reevaluated and changed their indirect rate structure in the last year. So it's also a dynamic process where you may define the way that you want to think about your overhead or your indirects right now. And then a year from now, 5 years from now, maybe a joint venture comes along and you have the impetus to then go in and re-look at those indirect rate structures, and how can you become more competitive on cost type contracts that you're bidding on by getting those indirect rate structures into different categories for cost reimbursable contracts like Ryan talked about earlier. So think of it as a liquid process. It's dynamic. You can be changing those, once you move through the appropriate restrictions around your contract. You can't do things that the government doesn't want you to do, of course. But you can look at them as a company, on a periodic basis and think about how you want to track your indirect rates, how you want to report on those. And ultimately, it's just a great business practice to understand for your profitability of your projects.
Excellent. I think that definitely is a hot item question, because another question had come in, how do you set your indirect rate when you're a new startup? But I think both of you just knocked that one right out of the park. Very good discussion on that topic, and I don't see any other questions. Ryan, if you want to go back to just the contact slide, I think a couple of back. Yep, that one there. We just have a couple of minutes, but I just wanted to say, unless Ryan or Donna, you have anything else to throw in?
No, I just wanted to say, thank you. This is awesome. I'm glad you sponsored this, Matt and team. This is fantastic. Always love having the opportunity to speak through this particular topic, because it is one that offers such a foundation for the future of, anybody in government contracting. Is if you get your accounting system kind of set up and oiled the way you want it to work up front, you can satisfy compliance, but it really is just such an opportunity. So, I just appreciate the opportunity to speak to businesses that are interested in getting it right on the front end. I always say there's two different versions of calls we get as consultants. It's one from outside counsel and one from the contractor. We prefer the one that comes from the contractor. So getting it right on the front end, and that's obviously why this type of a thing is put on by your group, and contractors are interested in it, is because they want to get it right. And so really, really appreciate the invite. Thank you.
And we'll be doing some other sessions, we hope, throughout the year. So we're looking at this as maybe a series around barriers to entry and things to help government contractors compete more effectively, win more deals, and of course, get some of this back end nuts and bolts put together. So we'll be following up with the attendees and folks who had signed up for the webinar, and we hope to see all of you again in the future.
Yeah, thank you very much again, Ryan and Donna, and everyone that joined us today. Like Donna mentioned, more of these to come in the future and near term, and hopefully we'll all be live and in Lincoln soon. But there's the contact information on the screen. Please don't hesitate to reach out to any of the experts you've heard from today. We're here to help provide that technical and business assistance from cradle to grave to create community, spark your innovation, and grow your business. So again, happy St. Patrick's Day, everyone, and hope everyone has a good day.
And to you. Thanks, y'all.
Thanks, everyone.